Okay, so we're halfway through the steps now. So let's look at step 6. Make any adjustment for any loans and investment funds. So in the question it tells us that Connolly borrowed 84,000 on the 1st of the 7th, 2004, part of which was to purchase an adjoining warehouse costing 70,000. It was agreed that the sum borrowed would be repaid in 12 equal installments on the 1st of June each year. So that's the first part. So if we look at the installments, so it's going to be 84,000, 12 equal installments, so 7,000 per year, and it's going to be in your balance sheet as your current liability. So it's asked to repay back half yearly. So it starts on the 1st of June. So that's your 7,000 will go into your balance sheet as a current liability. The second part then is based on the loan itself. So interest was to be charged rate of 10% per annum on the initial sum to be paid back monthly at the end of the month. So he's got 84,000. The rate is going to be 10% per year, but he only has it for 6 months. So he got the loan out on the 1st to the 7th. So it's going to be 6 months. So 6/12 is going to be for the first installment for this adjustment. So the amount then is 84,000. So that's going to be 84,000 multiplied by 10%. Then multiply that by 6/12. So he needs to repay 4,200 for this period. So the total amount he's going to pay is 4,200. That's going to be in your expense. But in the question then, just have a look and see bank payments. Did we pay any interest so far? And we have interest of 2,325. So always have a look in the question to see if we've made any repayments for any expense. So that was 2,325. So that's going to be what we've paid already. So what we've left to pay then is 1,875, and that's also going to go on your balance sheet as a current liability. So loan repayment, find out how much we're going to pay back per installment. So 7,000 for this installment. The installment doesn't have to be repaid back till the 1st of June. So you only have one installment to pay for this period. So that's going to go into your balance sheet as a current liability. And then the loan interest then. So how much has to be paid in the loan interest? So the loan is 84,000, 10% per year. We only got the loan out in July, so we only got 6 months interest to pay. So the total interest for this period is 44,400. Have a look to see if we have paid any interest so far. That's usually in your bank payments section. And then if we have, reduced it against your expenses, and that's going to be your due. So that's going to be 4,200 is going to go into your expense. 1,875 is going to go into your balance sheet and your current liabilities, and this 7,000 is also going to go into your balance sheet as a current liabilities, and that's step 6 done.